Welcome back. Oil prices higher yesterday, hitting a 13-month high. Take a look at what oil is, $58.68 a barrel after Saudi Arabia pledged extra supply cuts in February and March. Joining me right now is the Schork Report publisher, Stephen Schork. Stephen, it's good to see you this morning. Your reaction to what we're seeing in the oil markets. It's interesting to note that even as demand has slowed so much globally because of the coronavirus, you're talking about $60 a barrel oil.
Yeah, absolutely, Marie. And what we're seeing is a pricing of stronger fundamentals into the new year. We started to see it over a month ago. We always have to keep in mind that spreads lead the way. What does that mean? When we look at prices along the forward curve, of course, we have the spot price and then we have the futures prices. In a normal, healthy market, we want to see backwardation. That is to say, we want to see spot prices greater than futures prices. That is a clear signal that demand in the spot market, in all commodity markets, are cleared in the spot market. Remember that spot prices or demand in the spot market is outpacing supply. That is a normal, healthy market, whatever commodity we're talking about. Now, for the better part, or during the since the start of COVID, we've been in this situation called contango, which spot prices are cheaper. So it made no sense. It made more sense. The market was telling you, don't consume your oil today. Don't put it onto the spot market. Put it into inventory. That has reversed. Now, oil is being bid out of inventory. So we're seeing a decline in inventory, and that is a sign of rising demand. And hence, we've got stronger prices.
So what do you make of the several state attorneys general on President Biden's decision on the Keystone XL pipeline? They say that it will result in devastating damage to state and local communities. What impact do you see if construction of the XL pipeline does not continue?
Oh, well, that is clearly the situation here. And even when we had President Obama's in his first term, when Hillary Clinton was Secretary of State, her State Department, the EPA, all signed off on it. And their State Department, that analysis that was done more than 10 years ago, clearly stated what an economic boon this would be for the states, towns, communities with the construction of this pipeline. Now, foregoing the pipeline, we're going to see a considerable amount of job decay in this industry. We're already seeing it, Maria, over, since their respective peaks over the last 2 years. Pipeline construction for oil and gas, support services, rig counts, and so forth. We've seen, probably about, my estimates, about 200,000 job cuts. Now, clearly, that's going to accelerate when we put this moratorium. And keep in mind what the Biden administration is telling us, and they've codified it, Maria, in their 2020 platform. This is going to be the most hostile White House the oil and gas industry has ever seen. And therefore, they're going to violate the bedrock of capitalism. And that is, capital goes where it is welcomed, stays where it is well treated. And the Biden administration is clearly telling us that investments into fossil fuels will not be welcomed over the next at least 2 years while the Democrats control the legislative agenda. Yeah.
Well, remember President Obama's favorite was Solyndra, right, during the heyday there when we were talking about. I know. Stephen, it's good to see you this morning. Thank you, sir. We will keep following this important story. Stephen Schork.